Now, when we talk about micro business turnover tax, I'm sure at this stage a lot of you probably think, oh, well, I don't really need to worry about that because I don't really have any clients registered on the micro business turnover tax. And up until now, that has really been the case. I think there's only about 8,500 micro businesses registered around the country. And that has been a pretty stagnant number ever since the micro business turnover tax came in. So it hasn't been a number that's increasing every year. Although the micro business turnover tax, when it was introduced, it was specifically brought in as a means of bringing small business and micro business, so right at the small end of the scale, bringing them onto SARS radar screen. Because as long as SARS brings them in, they make it nice and easy to do the tax calculation, but they are then at least on the radar screen, and from there SARS knows about their movements, etc., how they're growing, etc. It's much better than having a whole host of small businesses operating out there completely in the informal sector. Nobody knows who they are, what they're doing, etc. So it was a means of formalizing, bringing small or micro businesses into the formal sector. But although there was an initial take-up, and we pretty much reached that 8,500 in the first year after implementation. Since then, there's not really been this massive, annual increase, whereas you would expect that to be the case. You would expect as small businesses start up, and I know there's a high failure rate, but the thing is when small businesses start up, you would think they would register for the turnover tax, but it hasn't really been happening. And so we sit with this turnover tax where a lot of people are saying, well, why don't we just get rid of it? But the thing is, we actually have to reevaluate this, because in light of what was said in the budget speech, it's actually completely the opposite. There's no plan to get rid of the turnover tax. In fact, any of you who attended my tax update in March will know that the proposal is actually to really entrench the turnover tax, give some relief on the turnover tax, but keep it. And then the real movement is happening, believe it or not, in the small business corporation arena, where they're looking at doing away with the tiered tax tables. So now we need to look again at this micro business turnover tax, because it might well be that there are some of your clients out there who actually should be on the turnover tax. And perhaps you should look again to see if you can bring them in. Now, we're going to go through the requirements of what businesses qualify for the turnover tax as micro businesses. So you have the term micro business, and then micro business is taxed according to the turnover tax. So we'll look at what is a micro business. How do you qualify as a micro business? And then having done that, we'll have a look and see how the turnover tax works. But it's a very simple tax system, and that's really the key of why National Treasury wants to really entrench it and keep using it. Okay, so what qualifies as a micro business? Well, it's basically all business forms, natural persons and companies. And for natural persons, it can even include the estate of a deceased or insolvent person if that individual themselves was registered as a micro business while they were alive or prior to insolvency. All right, because remember that upon insolvency or death, we have a new taxpayer that comes into existence, being the estate of the deceased person or the insolvent estate. So what we're saying is that that new tax entity, as it were, that new tax person, can also be taxed as a micro business. All right, not going to happen all that often, but it's just important to bear that in mind. And then, of course, companies and CCs. But the key thing is that the qualifying turnover of that person must not exceed R1 million per year. And if you're trading for less than 12 months of the year, then that R1 million is prorated. So if you only start business 1st of April, you're only going to be trading for 11 months of the year, because everybody on this micro-business system has to have a February year end. So you'll be trading for 11 months of the year. You would then prorate the R1 million to work out that threshold. And if your qualifying turnover goes over R1 million, then you don't qualify as a micro-business any longer. Now, interesting that even with the new proposals that National Treasury is bringing into place, and we had a very interesting workshop with National Treasury about 2 weeks ago, where we actually we put our thoughts on the table around small business, and we also, Matthew Lester was there as the representative of the Davis Tax Review Committee, and he told us what the Davis Tax Review is actually proposing, and then we sort of discussed it to a small extent, but we went away with the understanding that we would all get feedback from the various constituencies, and that's why your feedback is important, and we would then feed back to National Treasury and let them know what we think of these proposals. Now, in terms of the proposals, they really relate to the changes, that is, relate to the actual table, the turnover tax table. So these requirements around who will qualify for turnover tax, although the budget tended to indicate that they would change these requirements, the Davis Review Committee has now made it clear they're not looking at changing the requirements. So these requirements will still apply. The 1 million rand threshold will still be there. And there will still be this the concept of which entities qualify, but there will still be these, have I gone forward? Oh yeah, qualifying turnover first, and then I'll come to the exception, sorry. So the qualifying turnover, when we say the qualifying turnover cannot exceed 1 million rand, qualifying turnover is essentially cash receipts. And that's why it's such an easy tax to calculate, because you really are saying how much cash came into the business during the year. And pretty much every business owner would be able to measure that. I mean, really, if you don't know how much cash you got in during the year, your business is not going to last very long. So this is no fancy adjustments, etc. It's basically total receipts from carrying on business activities excluding capital receipts, because there's a special rule around if you have sold capital assets. All right, but in the ordinary course of events, it's basically total receipts coming into the business. It includes any amounts received by any connected person. So this is a sort of an anti-avoidance rule that you can't divide one business into a lot of little businesses and try and get them all to be taxed according to the turnover tax, because the commissioner will lump it all together if they're all connected persons, and he believes that you've basically divided it up to get a tax benefit. So that's really what that is saying over there. So essentially, qualifying turnover you could pretty much think of as your cash receipts. So we are saying any business entity, pretty much, could qualify as a micro business as long as the qualifying turnover does not exceed 1 million rand per annum. Pretty straightforward. But now there are some disqualifications. This is where things get a bit technical. And the qualifications linked to shareholding, there's another category that talks about the composition of your income, which I'll come to just now, and then a couple of other exclusions as well. But if you look at shareholding, if your business is a company or closed corporation, if at any time during the year of assessment any of your shareholders is a person other than a natural person, then you don't qualify. So we're pretty much saying, yes, companies and CCs can qualify, but all the shareholders or members must be natural persons throughout the year of assessment. Okay, so you can't have company owning company. The underlying company would not qualify as a micro business. If your micro business is a sole proprietor, an individual, that person may not hold shares or have an interest in the equity of any company other than permitted investments. Now, when we come to permitted investments, I'll show you the list just now, and that essentially is talking about your listed shares, collective investment schemes, that type of thing. All right, but notice here that it says that essentially the person, so if you're carrying on business as a sole trader, you may not hold any shares other than permitted investments, finished and clear. All right. When we go to the next category, if your business is a company or closed corporation, no shareholder. Now remember, they must all be natural persons. None of them can hold shares in any other company other than permitted investments. But, and this but only applies to this category over here, this does not apply to shares held in another company that has never traded nor held assets with a market value exceeding 5,000 rand, or alternatively, one of your shareholders has an interest in another company, but it's in the process of being wound up. So you must have commenced that liquidation process, and then effectively you'll qualify from this exclusion. But it's a little bit of a technical point, but it could make a big difference, and a lot of people miss this. And that is that when we talk about a company that's never traded or owned assets with a market value exceeding 5,000 rand, so that's pretty much your shelf company, that exclusion only applies if your micro business is a company or CC and it's one of your shareholders that has an interest in a shelf company. It's a bit of a strange one. They should have made this exemption applicable to both the sole trader and shareholders in a company. But the way the legislation sits, and of course you've got to apply the legislation the way it is, even if it seems illogical, still got to apply it, and that is the way that exemption sits. Okay, so those are your disqualifications around shareholding. Then we go to disqualifications around, if I can just get my iPad to work with me. Today just seems one of those days. Traffic, technical issues, you name it. Okay. So permitted investments, sorry. Normally I use my cell phone as my sort of remote, but for some reason it doesn't want to connect this morning either. So as I say, I'm just having a lovely morning of technical issues here. Oh, there we go. It's actually working now. Okay. Permitted investments, all right? What can your shareholders invest in? So this is your listed companies, portfolio and collective investment scheme in securities or properties, body corporates, share blocks, those exempt entities under Section 10(1)(e), your venture capital companies as defined in Section 12J, less than 5% interest in a co-op, and any interest in a friendly society. So that's what you're allowed to invest in. Now, for most people, what they would make use of here is probably investments in listed companies. They might have a portfolio of shares. That's okay. They could invest through a collective investment scheme, the old unit trust, into securities or properties, and then of course you can have an interest in a share block company, body corporate. That's pretty much what you're going to come across. You're probably not going to have a lot of people with venture capital companies and so on, although that might take hold going forward, depending on the changes that come through there. Now, the other disqualification, income and receipts of the business. We're still talking about micro businesses here. I know it's starting to look very similar to small business corporations, but this is still on micro businesses. If more than 20% of the total receipts during the tax year consist of professional services, if you're an individual, or if you're a company or closed corporation, a combination of professional services and investment income. All right, so if that type of receipts makes up more than 20% of your total receipts, then you're not going to qualify as a micro business. Okay? And there's no 3 or more employees that comes in here. The 3 or more employees you see on the small business corporation. You don't see the 3 or more employees featuring here with micro business, which is another restriction. And then you wonder why we've got no micro businesses by the time we finish with all of this. Okay? Then the other one is that if your total proceeds from disposal of capital assets, basically, exceeds 1.5 million over a 3-year period, then you won't qualify as a micro business. That's not a very frequently encountered one. But this one with professional services is a very frequently encountered one. And it essentially means that if you're carrying on a small tax practice, accounting practice, even if you've got 5 employees, you're not going to qualify as a micro business. All right. And even if your turnover doesn't exceed R1 million, you're still not going to qualify as a micro business because you're getting more than 20% of your total receipts from professional services and investment income, or if you're just an individual, from professional services. Now, that's not anything that's going to change anytime soon, because based on this meeting we had at National Treasury, it was very clear from the people on the left-hand side of the table. It was kind of SARS, National Treasury and Tax Review Committee on one side. I think it's just, I don't know how it worked like that, it just did. And then all of us from the private sector on the other side. And kind of on the left-hand side of the table, it was very clear that these tax relief measures are not intended to benefit professional businesses. Okay, so I know it's unfair, but that's the view that has been taken. So it's not going to be something that's going to change, and it's no point getting into any dialogue around that right now. They are very defensive about that. So they're not going to change the professional services thing. Okay. Now, what is professional service? I'm sure you have seen this list. It's very comprehensive. In fact, it's pretty broad and vague, actually, because there's no specific definition of all these various terms, so it can actually extend very, very widely. But it's a service in the field of any of the following, and then it goes on: accounting, actuarial science, blah, 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 all that stuff, veterinary science, translation, etc. Now, people often say to me, they say, what does such and such a term actually mean? Well, there is no specific definition. So if you came to me and you said, what does the term consulting mean? Well, I mean, consulting, there's no definition in the Act, so you've got to go to the normal definition of the word consulting. So look it up on Wikipedia, or look it up in Oxford Dictionary. You know, that's pretty much what consulting means, is the ordinary meaning of the word. And if I recall correctly, the Oxford Dictionary defines something along the lines of consulting being providing professional advice. Now, this is also something, you heard the word there again, professional. And there's been a lot of discussion, because with micro businesses, remember it says that not more than 20% of your income must be derived from professional service. And professional service is defined as a service in the field of any of the following. Now, I don't want to get overly technical here, but why do they say professional service? Why don't they just say service? Now, professional service tends to indicate that it must be something done as a profession. And there's a lot of discussion around this right now. Do we really mean that you must be, for example, a registered professional accountant in some sense, a CASA, for example, in order to be rendering a professional service? What if you get Joe Bloggs, just come out of school, did accounting for matric, got 30%, passed it, and now he sets himself up as a accounting service? Is that also a professional service in the field of accounting? So this becomes interesting. You know, I mean, I'm pretty sure that SARS would say, oh, you're doing accounting, that means it's a professional service. But it becomes quite an interesting discussion. You know, what do we mean by professional service? And why do we use the word professional if it's not actually really significant? Okay. Of course, it doesn't really help many of you, because you are all operating as professionals, and so if you wanted to register your business as a micro business, you are rendering a professional service in that field. So unfortunately, you fall smack bang into this particular exclusion. Okay, but it's an interesting point to ponder. Then, of course, companies and CCs can't get more than 20% of their total receipts in the form of professional services and investment income. And what is investment income there? Income in the form of annuities, dividends, interest, rental from immovable property, royalties or similar income, and any proceeds from the disposal of financial instruments, whether trading or investment, makes no difference. Okay, so that all comes into investment income. So if you do have quite a large amount of investment income, although interestingly it says any income in the form of, it doesn't say gross income. Income. Income means what is left after all of your exemptions, which also I think they have not quite got that wording right there, because I'm sure they meant gross income, because they talk about any receipts making up income in the form of dividends. So again, it's a little bit of a strange wording. But if you had to argue it, technically income in the form of dividends would pretty much be naught in most cases, all right, because most of your dividends are exempt. But anyway, let's not get too bogged down in all the technical realms of this. I do just want to highlight to you that these things are anything but simple. And this is supposed to be a simple tax system for micro businesses. And you know, even amongst tax experts, they will debate at length around the interpretation of many of these things, which means it certainly is not simple. Okay. Other kinds of disqualifications. So we've had shareholding issues, we've had the income components, and now we look at other factors. Personal service providers, labor brokers cannot be micro businesses. All right? And if a company or CC has a year end other than February, well, obviously, if you want to be a micro business, you've got to change your year end to February so that you will be able to be a micro business. And then PBOs, recreational clubs, if they are companies or CCs, they cannot be registered as micro businesses. Okay, so those are your other disqualifications. So as I say, that definition, just the mere definition of what is a micro business, is actually pretty complicated. And I was hoping they were going to kind of relax some of these requirements, do away with some of these disqualifications so that we could get more businesses into the realm of micro business, but that is not going to happen. Okay, so these requirements, we are told, are going to stay as is. Just on partnerships, of course, when we talk about disqualifications, if any of the partners was not a natural person or they're a partner in more than one partnership, and again, the qualifying turnover applies for the partnership as a whole. What I wanted to get onto was this turnover tax table. Now, the turnover tax table you saw with the budget speech this year, and you would have seen exactly this slide if you attended the tax update. So there's been no change to the turnover tax table from last year. No inflationary adjustment, no change at all. All right. But what this turnover tax table is telling us is that if you have taxable turnover, now notice here it talks about taxable turnover. That's different to qualifying turnover. Qualifying turnover is what you measure to see if you've breached the 1 million rand. Taxable turnover is what you measure to establish your tax base on which you are taxed. Okay. It pretty much means the same thing if you don't have anything funny there. You know, it's going to be your cash receipts. That's the basis of it. But if you've got capital gains, you include a component of capital gains, etc., into your taxable turnover. And that's where things can get a little bit complicated. But once you've established your taxable turnover, we are saying the first 150,000, there's no tax. So that's your threshold. You can earn taxable turnover, cash receipts from your business pretty much up to 150,000 a year before you pay any tax at all. And then we start with 1%, 2%, 4%, 6%. So very lenient tax rates. But bear in mind, this is based on turnover. The very first item on your income statement. The very first amount that comes into your business, your cash receipts, plus various other adjustments. I'll show those to you just now. But that's pretty much the starting point of what comes into your business. That is what is taxed. So no deductions are taken into account.